Hi there, my name is Jamal Khan. I'm a senior tax partner at Churchill Tax. Today I'm talking about the budget announcements in October, end of October 2024. And specifically, I'm looking at the tax planning points. I'm not looking at the basic issues, for example, tax rates or this or that. The most, my focus will be on how people can restructure their affairs in light of what's been announced. So this is not your ordinary update. This is a very kind of specialized update. Okay, I will share my screen. Right, here we are. So let's have a look. This is a little about us. What we do, we specialize in tax. This is what we do: tax planning, tax advisory, tax investigation, dispute resolution, tax tribunal, and mediation through alternate dispute resolution. So this is what we are famous for. So the budget, well, I said, I don't want to go through kind of the very basics, which almost every company and every newspaper has covered already, but I just want to focus on the tax planning points of view, the tax planning issues, and what people can do. So changes to capital gains tax, the tax rates, the lower and higher rates of tax have been increased to 18% and 24%. The business asset disposal relief, which was very much liked and favored by entrepreneurs, is being essentially withdrawn. But it's a lot of people thought it will be from 31st of October 2024, but they've delayed it to 5th of April 25. So the 10% relief will apply until 5th of April 25, and then it will increase to 14%, and then it will, after 26, it will go to 18%. So if somebody's planning to kind of sell their company or business or business related assets, the best time to do it will be before 5th of April 25. There will be yeah, so otherwise you will pay some more tax, which could be between 18 and 24%, depending on if you're a basic or a high rate taxpayer. If you're a kind of a high rate taxpayer, which normally you would fall into higher rates if you're earning over £50,000, and then you'd start paying 24%. So the difference could essentially be between 10 and 24%. Okay, very important. Big changes to inheritance tax as well. So the agricultural property relief and the business property relief are being reformed from essentially there is a breathing space before that for for almost 1.5 years. So currently, if you've got business property assets, company which qualifies as a trade or a business property, if somebody passes away, that becomes exempted at death. However, because the UK Chancellor is not making enough money already, they have said that no, you will, even if you die, if you have a business property, the first 1 million will be fully exempted, and then 50%. So if somebody dies with an estate, currently, if somebody dies with an estate of 10 million and that company's worth, or if somebody dies with a company shares worth 10 million, these company shares are in a qualifying business company, then there's no inheritance tax to pay. But from April 26, it will be 50%. So the first million will be exempted, and then the rest 9 million will be 50%. So you'll get relief on 5.5 million. And this will hit people really badly. because I have a lot of clients who will suffer. Similarly, if you've got AIM listed shares, the relief on those will be half to 50%. Another big blow is for pensions. If somebody has unspent pension pots, this will be brought into the estate for inheritance tax purposes. Well, I mean, I say one thing is you can't plan to die sooner to get maximum reliefs, but you can use some other strategies that a lot of accountants have been contacting me about since the budget was announced. Jamal, what do we do now? And I said, well, worry not. There are a lot of other, quite a few other strategies that we can use to potentially mitigate inheritance tax and capital gain tax. Okay. Domicile. Yes, domicile is an important one. Up until now, people who came into this country were able to claim remittance spaces for the first 7 years. That means if you don't bring your offshore income to the UK, you don't pay tax on it. If you bring whatever you bring, you have to pay tax on it. But that's being abolished from April 25. And the new rules are if you've been in the UK as soon as you land in the UK, you become subject to tax, but the first 4 years will be exempted. Okay, we will see more rules on this in due course, but that's the main idea will be the first 4 years will be exempted after the first exempted for foreign income and gains or capital gains. So, for example, if you came to the UK and you've sold some property abroad in the first 4 years, as long as you keep the money outside, that's fine. But after 4 years, if you sell the property abroad, you still have to pay tax in the UK. And for inheritance tax, the new rules are, I mean, up until now, you were seen as domiciled if you've been here for 17 out of 20 years, or 15 out of 20 years. But now, if you've been here for 10 years, 10 out of 20 years, you will be considered as domiciled and you will have to pay, if you die within the UK, whilst you're living in the UK, you'll have to pay tax on your global assets. So you need to plan carefully before you come to the UK. Or if you've got any assets in the UK, abroad, and you are living in the UK currently, and you're essentially non-domiciled, you need to call me, and I will be able to speak to you about your options. Okay. There's a point about electric cars. Yes, so the first year allowance has been extended until 31st of March. People do like to buy electric cars, and I thought I'd mention it that you've got still some breathing space for electric cars, and buying a car, even if it's a £10,000 car, £20,000, 50, 100,000, £200,000 car, you get full first year allowance. Okay, so we can help you if you need any help with your business plan, tax planning. You can always get in contact. Here are my contact details, and I'm always here to help. Thank you. Thanks.